Good afternoon and welcome back to the channel. So we did indeed see some liquidations over the last 24 hours. That's why I posted that in my community tab last night, talking about the leverage ratios spiking over the last few days. So in all reality, this is a good thing. We do not need a lot of leverage in the market. So the more that they get liquidated, the less funds they have available to trade leverage. And so hopefully the more the market starts to stable out. Now, this was the green wick that we saw over the last 24 hours. And this is the article that came out. Nearly 80% of long positions were liquidated over 24 hours, with 90 million in losses on Bitcoin futures alone. So that's the green wick, but it has grown since this article came out, because when I ran the numbers here and I ran this chart, this was, I think, 110 million. So that's $110 million worth of selling pressure coming in a very short time frame. It's going to cause downward price action, something that should have been expected as we saw the leverage ratio go way up yesterday. Now, I think that we will see a reversal, and I think that at some point in time, it will bottom out. There will be a little consolidation, and then it will go up. How far it goes up, maybe just to this resistance level, but that will be enough to liquidate the short positions as well. We see plenty of different times where there are longs and shorts liquidated within the same time frame through up and down price action. Now, if you just go back over the last 30 days, green is longs being liquidated, red is short being liquidated. Now, this is 30 days roughly from where we are right now. So this time frame. This is hundreds of millions of dollars being liquidated. Okay, this is a very profitable process for some individuals. Okay, so there is incentive for this up and down price action, even though we're staying in a particular channel. And this is not my attempt at doing TA. I just want to show that we are in a channel, even though this looked like it was a descending wedge. And then it looked like we broke out of it. But if you just go, I mean, we're in a channel, more or less. So I wouldn't get too overly excited about anything as long as we're in this area. We may even dip down a little bit further, but I think they're going to bait as many short positions as they possibly can. And then they'll bump it up and they'll liquidate those individuals as well. So, but we know that as a whole, in aggregate, there's more longs being liquidated than shorts being liquidated. So there's more, the leverage trading market has a net negative effect on the price of Bitcoin. Now, I want to go over this because this would not be that hard, guys, to manipulate this market. It would not be that hard. To be honest with you, I could probably, if I had, it would need more information, right? But I mean, if I had enough money, I could probably do this. I could probably set all this up. Okay, I could just oversee the operations, not the technical part of it. I'd probably need some tech people to do that, but this would not be that hard. I'm going to show you how. So at the top here, we have the price of Bitcoin on a graph. Right now, how is this price calculated? Well, Sam Bankman-Fried gave us a lot of good insight during the congressional hearing, talking about how they use larger exchanges and market makers and the buying and selling activity on those different exchanges to determine the price of Bitcoin. But we know that they don't use all exchanges, and we know the OTC desk is not factored into this. So calculating the price of Bitcoin is done off of select exchanges and market makers, right? So this is how hard it would be. Let's say that these 5 red boxes are different larger exchanges that they use to calculate the price of Bitcoin. They are the ones that are primarily used by most of the bigger exchanges. So these 5 boxes are the 5 exchanges. So if you're a large financial institution, one of these big banks that gets caught manipulating markets from time to time and has to pay big fees, right? So there is precedent for this. It's not like these big banks have never been caught rigging markets, especially one in particular that gets caught more so than others. But you could have some type of a data feed set up. If you're this large, and this picture represents the financial institution, the people that they have running the show, right? So you could take these 5 exchanges that do their buying and selling, the activity combined on those 5 exchanges helps determine the price of Bitcoin. You could have a regular data feed coming in, giving you the buying and selling and the volume. So if you, let's say that you're the financial institution and you want the price to go down at a certain percentage, right? You want downward price action at a certain percentage based on a number of different things. So let's say that you get this data feed coming in and it's 70-30 buying, more buying than there is selling, like a 2-to-1 buying as opposed to selling. Well, you would say, all right, well, based on the volume, how much is being bought, how much is being sold, and the fact that it's 70-30 in favor of the buying, the price is going to be going up by X percentage. We need the price to go down by X percentage. So a simple computer program could say, based on the buying and selling that's happening on these exchanges, you need to sell X amount of Bitcoin every hour, every 2 hours, and this could be regularly updated. They could be getting this data feed every hour, every 30 minutes, and say, okay, this hour we need to sell this amount of Bitcoin to keep the price where we want it. I mean, this would not be that hard to do, guys. I mean, I'm not saying this is exactly how it's done, and I need to learn more about the mechanisms of how all this is structured to better understand it myself. But over the next year, I'm going to dedicate so much time to figuring this out, because I'm going to figure it out like concrete. This is how they are doing it. Here's all the different ways in which they do it. But I think that something like this would be very easy as well. Okay, you have the real-time data, the buying and selling data that's coming in from the main exchanges that calculate the price of Bitcoin, right? So you get that data. You say, okay, well, based on this, based on the activity, if I don't do anything, if left untouched, the price is going to be going up at X percentage. We need it to go down at X percentage. So it could vary. It's an if-then algorithm. Okay, if there's this much buying and this much selling and this much volume, you need to sell X in order to get the price to where you want it to go. And they have the Bitcoin manipulation fund, which I'm going to be going over that here again in a second. So this could be a very easy process. If you have $5 billion, some people who are pretty smart with writing, just very basic, you don't have to be that smart, just write very basic, if then, computer programs on what you need to do in situations like this based on the buying and the selling that's happening on these different exchanges. So next part here, we're in this channel. Again, I wouldn't get overly excited about anything. I think that we would see I think we will see some type of a reversal at some point in the next week if those short positions keep their positions open, and if there starts to become a lot of short positions and there is incentive for them to bump it up high enough to liquidate those individuals, I think that we will see something like that. And I think that we could see a red wick, a very similar sized red wick, happen at some point over the next week. All right, now back to the Bitcoin manipulation fund, the OTC desk. So none of this is financial advice, by the way. I'm not a financial advisor. I don't know if I already said that. So if you're looking at this, I'm going to simplify this even further. All right, so let's just do two different entities, the OTC desk. In the OTC desk, I'm using the OTC desk as a generalized term for the OTC desk and any other exchanges that sell Bitcoin, but those exchanges are not used when they are calculating the price of Bitcoin. Okay, those exchanges are not factored in to the spot price of Bitcoin. Okay, so that's the term OTC desk. So I'm not just talking about the OTC desk, but I am primarily talking about it. And then also the Bitcoin manipulation fund. So those are the two different entities that I'm talking about here. So in these yellow periods where we have downward price action, two things, in my opinion, are happening. So the supply for the OTC desk is going down because we see more times than not, almost exclusively on chain, there are whales accumulating Bitcoin. However, the price is going down. The price is going down because they are accumulating Bitcoin on the OTC desk. So OTC desk balance is going down in these highlighted areas. On top of that, the Bitcoin manipulation fund is also going down because they are selling spot Bitcoin to drive the price down, as whales are simultaneously accumulating on the OTC desk. Now, at some point, both of their balances get low and they have to go resupply. Okay, so in my opinion, what's happening is they get low on supply, both entities have to go resupply, causing the price to go up on top of the rest of the activity that is happening, the rest of the buying and selling that is happening. So price goes up right here. They have resupplied at this point. The OTC desk and the Bitcoin manipulation fund have both resupplied right around in here. And then you start to see tons and tons of leverage pile up in the market. The Bitcoin manipulation fund, who loaded up right here, can sell, liquidating those individuals who played on leverage, and their selling counts for more so than what it should because it carries with it those liquidations, right? And people panic selling. So their selling has more of an effect than it actually should on the spot price. So as they are selling, so they start selling liquidations and it drives the price down. As they are doing that in these highlighted areas, there's also whales accumulating on the OTC desk. Okay, so they are accumulating on the OTC desk for a price that they work out on their own, right, has no effect on the spot price, completely off exchange, these backroom black pool deals, or what's it called, the dark pool, right? This is so similar to like the dark pool with everything that's happening in the stock market. But okay, so at that time, right, the whales are accumulating on the OTC desk, supply is going down, but the price is going down because the Bitcoin manipulation fund is selling. At some point, both of their balances get very low and they have to go buy more, both. And then the price goes up along with the rest of the buying and selling. And we just repeat the cycle over and over and over again. There's a lot of incentive for them to do this. I would imagine that both of these entities, everybody's working together, in my opinion. The OTC desk people, the Bitcoin manipulation fund, and the leverage trading entities, I would say, because all of this is tied in together. It's one living, breathing organism that they're using to manipulate the price of Bitcoin and create false perceptions on what's really happening in the market. So that's that. Now, there's only 1.3 million Bitcoin left circulating on exchanges. 1.3 million. That is 6.3% of the total supply. Okay, this is how much is left. Okay, everything else is gone. Now it's gone. It could also be brought back on exchanges to sell at some point in time. We do see that, but we see that with a very, very, very small percentage of the total amount. So they're just recycling through these Bitcoin left on exchanges and routing certain buy orders to the OTC desk, making sure that they're selling on the spot market so that affects the spot price. All right, so, but they only have 6.3% left on exchanges. And the reason I'm saying that is because at a $1 trillion market cap, I don't know where, I think it's a little bit south of 1 trillion right now, but let's just call it $1 trillion market cap. 6.3% of that Bitcoin would be worth 63 billion. The reason that I'm making this point is because Fidelity could buy this 63 billion tomorrow. Okay, that's how little is left on exchanges. And we already know the amount of asset managers out there that manage trillions of dollars of assets that are very bullish on Bitcoin. So in my personal opinion, these big financial institutions have already figured out a plan as far as how they're going to get in, how they're going to get exposure, when they're going to buy. They want to control the price of Bitcoin. They do not want it going super parabolic before they are ready. At some point in time, they will. But the point that I'm making is if it's only $63 billion worth of Bitcoin left on these exchanges at a $1 trillion market cap, a big financial institution could buy all of it, all of it. And so that's why I think they're all coordinating together, in my personal opinion. This is only a short-term fix, the way that they're manipulating the price of Bitcoin. And okay, so what backs this up? Let me start with that. A track record, a historical data of whenever these flash crashes happen, it's always, more times than not, the overwhelming majority of the Bitcoin that is sold that first causes downward price action. Then the liquidations come. So you have to sell first to drive it down, then the liquidations come. Every time we see that, the majority of that Bitcoin that is sold to drive the price down comes from short-term holders. Okay, now people often say, oh, or they're panic selling or they got flooded out of the market. Okay, if you're going to drive the price of Bitcoin down, that's not happening from people who would get flooded out of the market. That's happening from people who have tens of millions and millions of dollars in Bitcoin. Do you think those individuals are really getting scared and getting flooded out of the market and selling at a loss, or selling, at where they're just breaking even? Or do you think that those are the individuals that are working with the Bitcoin manipulation fund and they're just buying here, selling here, buying here, selling here? It's always the same pattern. The majority of the selling comes from newer holders, and that would make sense if retail had the ability to move the market like the big money does. Okay, they have hundreds of millions of dollars in Bitcoin that they can sell at any point in time, depending on where their supply is. And so when we see these new holders selling, in my opinion, the large amounts, those are people who are manipulating the market. Those are not, that's not retail panic selling. I'm sure retail panic selling is involved in that also, but I mean, they're probably panic selling down here. They're probably panic selling at the bottom. They're not panic selling at the top, right? And even if they're taking profits, again, we're talking about retail with very little amount of buying power and very little ability to affect the spot price because of how much they hold compared to these large institutions that can hold hundreds of millions of dollars. All right, so take out, and also the divergence from on-chain. When you see a divergence from on-chain and you see these wallets that have not held Bitcoin long selling at the exact same time, it's the timing too. That's why I posted that in my community tab. I could have easily said that this was going to happen, because as soon as the leverage ratio spikes, you have to expect that there's going to be some up and downward price action. They're going to liquidate both longs and shorts, in my personal opinion. Okay, so the market, they make the market volatile for a reason: to take out over leveraged positions through liquidations and to take out retail who panic sells. There's three types of sellers, in my opinion. These two, right? And these aren't even really, one is a seller, the other one's betting on the price going up, but they get liquidated and that causes selling pressure. So you have over leveraged longs, retail who panic sells, in the Bitcoin manipulation fund. Outside of those three types of sellers, I don't think there's anybody else selling. Now, there's always, the cases where somebody takes some profit, but the amounts that we're talking about in situations like that are not enough to move the market for the most part. So I think that those are really the three types of sellers. The big hands that are accumulating just take the crypto from both types of weak hands. So the weak hands that get liquidated and the retail that panic sells, they're just selling their Bitcoin to the OTC desk, more or less. Because in my opinion, the OTC desk has to regularly re-up on Bitcoin. And again, I'm just using the OTC desk as a general example. It could be numerous other entities. Anybody that can sell Bitcoin that does not affect the spot price of Bitcoin. Any individual, any entity like that, that's who I'm looping into this umbrella term OTC desk, even though I believe that most of it is happening on the OTC desk. But during these times where longs are being liquidated and retail's panic selling, they're just selling to the big money. And we know this because illiquid supply has continually gone up, right? So supply has gone from short-term holders to long-term holders because illiquid supply has continually gone up. And I believe we just saw an all-time high not too long ago with illiquid supply. Shorts will also be liquidated. Again, I think that we will see a red wick coming at some point in the next few days, maybe the next week. It depends. It depends on how many short positions are still open and if they're trying to bait short positions, because they might drive it down a little bit further to make people feel, oh, I'm going to go short on the market, and then they'll bump it up and they'll liquidate all those individuals too. So I wouldn't get too excited about anything as long as we're traveling through this channel. And even if we break a little bit below it, it really doesn't matter to me because I understand what's happening on chain. So I'm not really worried about any of this. That's the end. Let me know your thoughts. Also, let me know your ideas on different ways that you think that this could be happening. I greatly appreciate everybody. My channel is growing, and I think that it's growing to some degree because y'all have shared my videos with your friends. So I really do appreciate that, because growing by word of mouth, in my opinion, is more ideal than just growing off of YouTube algorithms, because I don't really want to attract everybody, every type of crypto person to my channel. I don't want to attract just being frank, the really dumb people in crypto who just, when's the price going up? And they don't even understand the technology or any part of the technology. They don't see this as a new, I don't want those people coming to my channel, to be completely honest with you. So I do really appreciate any of y'all that have shared any of my videos with any of your friends. And yeah, I really appreciate it. So that's all I have for this video. Let me know your thoughts in the comment section below. Take care. Have a good day. I'll see you in the next video.